My life is economics. For my presentation, I will be doing the economics of my job over the summer. At the beginning of summer, I got my first job at a snow cone shack owned by Wake Up Call, a coffee shop. Wake Up Call is an LLC, or a limited liability company, which means it is the type of business structure that combines parts of a sole proprietorship or a partnership with the limited liability of a corporation. My job is a service, meaning I was being paid to make snow cones for people. We sold a normal good, which means that the demand increased as income increased. Opportunity cost and wants and needs. An opportunity cost is a benefit a person could have received if they had made an alternative choice. I gave up the benefit of free time for this summer job. I also gave the opportunity cost of a better paying job because the job I got was easier and less busy, but was a minimum wage job. Needs are things you have to survive, and wants are not. Because I live with my parents, all of my needs are covered, like food, a home, etc. This means I could use my money for any of my wants. I put most of my money into a savings account so I could pay for college in the future, but what I didn't put into savings went toward shopping for stuff like band tees and new books. Resume and interview. To apply for a job, I had to give them my resume. A resume includes stuff like your name, education, and qualifications. An interview is a test that includes a conversation between the employer and the applicant. The interview process was pretty simple. I got a call to set up an interview. I got there and the interviewer had some questions for me to make sure I was able to do the job. Then I filled out papers and she told me when my first day would be. The circular flow of income. Because I have a job and buy things, I fit into the circular flow of income. I give them human capital in the form of labor to create the output for their business, and in exchange, they give me income. When I buy things with my income, it goes towards other people's incomes of other businesses. But there is some leakage to the circular flow, meaning the outflow of some of the income. For me, it's with taxes and savings. Taxes and savings. My employer has to give a portion of my paycheck to the government. This is also called a payroll tax. These taxes are used for Social Security, Medicare, and the Federal Unemployment Tax Act. People who buy our snow cones, or when I pay for things, we have to pay a sales tax, which is put on a good or service, which is collected by the seller to send to the government. Almost all of what I've earned has been put into a savings account. I plan to use this money for college. A savings account is a bank account that earns interest on money saved. Factors of production and deadweight loss. The factors of production of my job to make snow cones include commodities, capital, and labor. Some of the commodities we have are ice blocks, sugar water, and syrup concentrate. Some of the capital we have is the snow cone shack itself, the ice crusher, and the freezers. Labor is me and my coworkers. Deadweight loss is the cost created by market inefficiencies. There are many inefficiencies of this job. We lose some of the ice throughout the day from it melting or what isn't caught in the cup, and also some of the syrup spills, meaning we lose what we could have used. Sellers account for this inefficiency and include it in the price for the consumers. Specialization and absolute versus comparative advantage. Specialization is when someone/something concentrate their productivity on a limited set of goods or services. The snow cone shack is separate from the coffee shop, meaning we only make snow cones. This makes us much faster and way more efficient than the coffee shop that also sells snow cones. An absolute advantage is when something has the ability to make the best product at the lowest cost. Because of our specialization, we are able to make a better product at the same cost or cheaper than other coffee shops. A comparative advantage is when someone can produce something at a lower opportunity cost. In the time it takes the coffee shops to make a snow cone, they could have made about 2 or 3 coffees. This means they have an opportunity cost of about 2. The snow cone shack only makes snow cones, meaning our opportunity cost is 0, giving the snow shack a comparative advantage. A part of my job includes to take inventory of our supply. I had to update my manager on how much ice and sugar water we had. Our supply also reflected how in demand certain products were. Certain flavors, like tiger's blood, cotton candy, and blue raspberry, toppings, like our gummy sharks, and sizes kitty and small, were most popular. We had much more supplies of those certain things. At my job, I got to see the change in demand for snow cones and the reasons for these changes. The water at the pond that the shack was located at was very low, meaning no one really came to the park. Colder or windier days, we got less people, surplus, and shortage. Most of the time, we can predict how in demand certain products will be, but when we're wrong, this could lead to a surplus or a shortage. A surplus means the supply is much higher than the demand for it, and a shortage is when the supply is much less than the demand. We are still in a surplus of Swedish fish because the demand for it is very low. We are often at a shortage of tiger's blood syrup because it is our most popular flavor. We also recently ran into a shortage because of our ice supplier's ice machine breaking. Price and money. The price is the amount of money that has to be paid to receive a product. The price of our product depends on what size you get. $3 for an 8 ounce, $4 for a 12 ounce, $5 for a 16 ounce, and $6 for a 20 ounce. Consumers would pay through a variety of ways. This could have been through cash, card, or tap. People who use cash use a type of fiat money, meaning it's government-issued currency, but it isn't backed by a commodity like silver or gold. People who use card or tap on their phone, it comes from either their checking account or from their credit. A checking account is an account that can be drawn from at any time. Credit is an agreement where the borrower can receive something of value now and pay it back later. Utility. Utility is the total satisfaction received from consuming a good or service. Many people choose to pay the cost for a snow cone to use the utility of it. We have to deal with the issue of diminishing marginal utility, or the more someone consumes a product, the less utility they get from it. As the summer went on, regulars were less common. Us as workers also got free snow cones. By the end of summer, we don't really enjoy them anymore. Everyone uses economics as a part of their life, and this was the economics of my life.